people. Welcome, welcome, welcome.
Hi, everybody.
Hi.
All right, guys. So we got Krystal and Dedric here with the co-preneurs, and we have our special guest, Miss Kiara Martin, here as well.
She is in the ATL, y'all.
Yep.
Yeah.
So we're in our home office in North Carolina. Kiara's in Atlanta.
Let us know where you guys are at in the chat.
Yep, we see a bunch of people jumping on. Put where you're at in the chat. See Salita from Atlanta. But yeah, we're here to talk about personal credit. And we're going to talk about not just credit, but we're going to dig deep here and get into your relationship with money, where your money mindset came from. I know a lot of us, our upbringing, I know mine in particular, was raised by a single parent, and wasn't a lot of money in the household. There was a lot of love. But one of the most important things my single mom, who raised me and my three brothers, taught us was the importance of credit. She didn't have great credit, but one of the things that she instilled in me was, look, I don't have good credit, but you as my son are going to have great credit. And one thing she did was, when I was 18, I went to college. She actually got me a secure credit card. So I needed to get a futon. It was my freshman year in college. It was like $600. I had the money, and she was like, no, we're going to go to the bank. We're going to open a secure credit card. We're going to put the $600 in the bank, and we're going to pay $100 a month so that you build your credit. At the time, I didn't understand what she was doing. I was just like, okay, Mom, yeah, let's do it. But by the time I graduated college at age 22, I had like a 750 credit score because of the small steps that my mom took to improve my credit. And I've maintained a great credit score. And I put a post up earlier that credit is having an 800 credit score is like having 100,000 plus in the bank if you know how to leverage it. Yeah. So I'm excited to learn from Kiara. She's the owner of Bright Future Credit Solutions. She also has a blog called Credit with Kiara. And without further ado, we're going to let her take it away.
So just to let you guys know real quick, if you can, any questions that you have, you can put them in the chat, and we'll get to them after she's done. And I'll make sure I scroll back to get any question that we might have missed, but we're not going to stop in the midst of it. So we'll definitely get to it.
Yeah, we'll leave like the last 10, 15 minutes for Q&A.
Awesome. Love that. Okay, guys, again, thank you so much. My name is Kiara Martin, and I am your credit guru. We're going to be talking about personal credit and the importance of building your credit profile. So let me go ahead and share my screen now so you all can see my stuff. All right, so share screen. I'm working this thing out, guys.
Okay, so you should be able to share it now. I just made you the host.
I just got it. Thank you. Okay, can you guys see my screen?
Yes, we can see it.
Okay, so credit 101, right? We're talking about everything to do with your entire life. So a lot of people say, what is credit, right? So it's literally the number that is pulled from the information reported on your credit bureaus, right? So when I say the credit bureaus, I'm talking TransUnion, I'm talking Experian, and I'm talking Equifax. So your score is an algorithm that is pulled based on the information listed within the three bureaus. Now, bureaus can have different information because the companies that they use can verify different information to the credit bureaus. For an example, if you have a utility bill that you didn't pay and it happens to go on your credit, that utility company, it's possible that they may only pay one bureau to report it on your credit report versus paying all three. Or sometimes if you go to buy here, pay here places, and you notice that the amount for the car is only reported on that one bureau, it's because you have to pay to report each individual report, okay? So credit is basically showing if you are credit worthy or not. Does that make sense? It literally just say if you are a risk. If you're a risk, then your score is lower. Okay, the higher the score, the lower the risk. Does that make sense, guys? So what is not going to be on your credit? You're never going to see anything as far as like utility bills unless you don't pay them. Utility bills typically do not report to credit reports at all until they go to collections. So a collection and a utility bill are two different things. Once the utility bill goes to collections, the collection company is the one that is going to report it, never directly from the utility, okay, company. For an example, T-Mobile, you owe T-Mobile, you had a phone, you know, you were paying monthly on the phone, and for whatever reason, you switched to another carrier, you still owed on the phone with them, they put, you owe $1,000, you don't pay them, and you still have service during that time, they're going to charge $1,500. T-Mobile's not going to report it to your credit. The company that they sell it to after you have not paid them in 180 days are going to be the one that reports to your credit. Okay. So T-Mobile's not going to be on there, but most definitely your enhanced recoveries or, which is a very popular one, and your IC systems as well. Those are going to be the type of companies that you see on the actual report, because those are going to be collection companies. Okay, guys. So phone bills, same thing, layaway plans, daycare expenses, things like that, they don't report unless you don't pay. So those are not things that's going to build your credit, okay? Also, renting does not report on your credit. I know we've recently heard about like rent reporters and things like that. It normally only reports to one bureau. And again, we talked about that. In most cases, when you're trying to get purchase something major like a car or a home, they are going to pull all three, and they're going to pull your FICO score. And unfortunately, rent reporters does not report on the FICO score, nor does it help just reporting to one. So it's kind of a waste of time to have your rent report. Okay. I know a lot of people ask me that question, so I did want to put that out there. Rent reporting does help, but it helps your Vantage score, which is going to be like your Credit Sesame, and it's going to be your Credit Karma. So that's going to be a totally different scoring module than your FICO. FICO is what's used by 90% of lenders. So that's the score that you should be focusing on. Now your Credit Karma, as well as your Credit Sesame, are education tools to help you and give you more detail about credit, but it is not something that you should take to the bank, okay? There's no reason for you to be like, hey, this is my score. No, understand we are not walking around with a score, okay? So then next we talk about credit reports, right? So basically it's just your individual report of your borrowing and how you pay your bills and how you borrow from people. So for example, if you have a $5,000 loan, it's making sure that you're paying. It's your past credit history. It shows personal information at the top. Okay, your personal information should always be correct. It should be your name. It should be your address. It should be your phone number, only your current address. So no variations of your name. If your name is spelled wrong, that should not be like that. It should be correct. So it should be your correct name. It should be your correct year of birth. You're going to see some bureaus are going to have your entire date of birth, but it should just be the year. And if the date of birth is wrong or the year of birth is wrong, then that's an inaccuracy and you possibly could have had possible fraud. It's also good to eliminate any address that's not your current address, okay? So in your credit report, your address is important that you have the most current address, because when it comes to dealing with past credit mistakes, anything on the credit report that was linked to those old addresses can possibly be removed by simply removing the address that it was associated with, okay? So it's very important that you update your information too. You want to update it just in case you get mail or things like that, so that you can handle things like mail that you may receive from a creditor and things like that. We don't want to avoid those. We actually want them so we can fight them, okay, guys? So next is also going to have your phone number on the actual reports from like the annual credit report. Make sure you just list your most current number. Any other number should be removed. And it's also going to have your employment. It's important that you don't put too much information on there. You do not have to report your employment, but you don't want to have a whole bunch of different jobs on there. So that is what is a credit report, and that's what on a credit report. Under the personal information section, you're going to find your trade lines. A lot of people get it mixed up. A trade line is an account that you have that is open that you're making payments on. So that could be a credit card, that could be a loan, a line of credit. Any of those things will be considered a trade line. And the goal is to have positive trade lines, okay? Positive trade lines consist of accounts that are open with favorable payment history, meaning no late pays, no late pays. That is like the biggest thing, no late pays, okay? Make sure that your trade lines are positive. Under that section of your credit report, you're going to find that you have a section for inquiries. Your inquiries are just simply how many times you allow someone to pull your credit report. Now, inquiries will be the number one reason you will be declined for major loans, especially when it comes to doing business. They mostly want to see when it comes to getting approved for business loans and things like that, where you're the personal guarantor, that you have not applied for anything in the last 6 months. So understand, if you're trying to make big moves when it comes to your business using you as a personal guarantor, you do not want to try to apply for anything 6 months prior, okay? And then last but not least, it's going to be your public record section of your credit report. That information is going to be, that public record information is going to be bankruptcies and tax liens and judgments, okay? So that is where the most pain comes on the credit reports. Those judgments and those bankruptcies, those hold the most weight as far as keeping your credit score low in that category, okay? So that breaks down the credit report, how it looks and what information is on there. How does your credit report affect you? It's really important that we understand that credit is everything. And I know people say that and it seems so cliche, but it's honestly the truth. Employment. I've had lots of people come to me and say, hey, I'm ready now to repair my credit because, I can't get a job, right? You can get denied employment because of your credit. Insurance is another. I'm an entrepreneur, and when it was time to get my office, I had to show them my copy of my credit report and my LexisNexis report. So even in business as entrepreneurs, sometimes companies won't want to do business with you if you do have a low credit score. Interest rates, why pay more when you can pay less, right? That's the slogan. Literally, a lot of people that I find that live paycheck to paycheck can't afford their bills simply because of the interest that they pay monthly. When you look at some of the interest rates on vehicles and things like that, typical interest rates can go up to 24% on a vehicle. So when you think about that, you bought the car for $22,000, you're paying $44,000 for it, and it's not even worth it. Then now you're upside down. And then once you become upside down, then you can't get rid of that car. If it breaks down, you're stuck paying on a car that you can't even drive. And it just leads to a lot of financial struggles that we can avoid by going in and purchasing with a better interest rate and a higher credit score. So the best way to save money for your business or anything else you want to do, because that money that you're paying in interest can be used for something else, would be to have the highest credit score possible. I recommend a 750 and above. I recommend a 700 is even better than, anything under 700 needs to be worked on immediately. But the goal is 800 and up, right? You got 800 and 850. That's where you want to be. 850 is 100% perfect. I really don't see too many scores there, but I do see them in the mid 816s, 815s, and I believe that's where you should be. Okay. So this is exactly how this credit score works right here. You want to be here. 760 and above is excellent. You get the same interest rates between 760 and 850. So long as you're in the green and you're excellent, you're good. So I take it back, not 750, you want to be 760 and above. 700 is good, but you can be great or you can be excellent. And I'd rather be excellent, right? And then you have good, fair, poor, and very poor. Your score goes from 300 to 850. So you literally have 550 credit score points to play with. And how those credit scores are divided up or into these components right here, guys. So for an example, payment history is number one, right? So that's where our grandfathers and our grandmothers, that's where they came from, where they're like, just pay your bills on time and you'll be fine. This is where that concept came from, where if you just pay your bills on time, you will have good credit, because the largest portion of your credit report is 35%, and it is 192.5 credit score points. Now remember, we only got 550 of them, and almost 200 of those points are based on how you pay your accounts on your credit, or pay your bills, right? So understand that the biggest part of credit is you, right? It's how you pay your bills, 35%, okay? The next category is debt ratio. So what this means is your credit cards. So if you don't have any credit cards, you're missing out on this category, which is 30% of your score. But if you do, it's how you're managing them. So if you have $1,000 worth of credit cards and you're using $1,000, you lose 30% of your credit score. But if you have $1,000 worth of credit cards and you're using 100, that's only 10%, you know what I'm saying, of what you're doing. So therefore, 30% of your score is 165 credit score points, right? So just these two alone are 65% of your credit score, or based on how you pay your bills and having positive lines of credit and using them responsibly. So if you have credit cards and your score is fluctuating every single month, you're getting those alerts on Credit Karma, the reason is this 30% right here, how you're using your credit, amounts owed, debt ratio. I mean, it's multiple ways you'll hear that term, but just know that this 30% is the amount of accounts you have open versus how much you're using. So if you got $100,000 worth of credit and you're using $100,000 worth of credit, that's going to always be a problem, okay? So just paying your bills and spending wisely are going to be two ways that's going to keep your credit score at least 65% of the credit score points. So when you're looking at 192.5 and 165, that's majority of your credit score points right here. The next is average age of file, which is 15% of your credit score. That's 89.5 credit score points. So that's almost 100 points. So for you all who close accounts and you're like, you know, I paid it off and I closed it, why did my credit score go down? Or you say, I had a car loan, I paid my car loan off and my credit score went down. Why did that happen? Well, this right here is why. It happened because this part of your credit score is very important. Your credit likes to age. And a lot of times we don't allow our accounts to stay open, right? A big part of our credit report and score is longevity. So you have a credit one account, you know, when you turn 18 and you keep that account, you keep it 20 years. I mean, you created a strong credit history. That's 20 years of credit history. However, if you close that account because it's charged off after 2 or 3 years, then that doesn't help, right? So that's how you will see yourself losing credit score points from closing accounts or paying off certain accounts and not having anything just as owed on the credit report. So that's almost 100 points at 89.5 credit score points. Number 4 is going to be credit mixed. Credit mix is really important. It's important to have a mix of credit. They want to see not only can you manage credit cards, but can you manage your loans, like a car loan or a personal loan? Can you handle store cards and things like that? So it's good to just mix it up. It's a total of 55 credit score points right there, just for having an auto loan, a store card, a major credit card, things like that, right? So you want to make sure that you are mixing that credit up so that you have, and you can gain those 55 credit score points. It's kind of like writing your name on the test. It's so easy, like get those points, right? Don't leave any points on the table. Get those 55 credit score points. And then last is inquiries, which is 10% of your credit score based on how many times you allow a lender to pull your credit. So whenever a creditor or lender is evaluating you for credit, they pull a hard copy of your credit report to take a look at it to see if you will be credit worthy. They want to figure out what the risk is to lend you credit, right? So with that, too much shopping for credit can cause lenders to feel that you are risky or that you need money. So they will sometimes decline you in most cases if you have too many inquiries. So a safe place to keep your inquiries is 4 inquiries a year. Because after 1 year, the inquiries do not matter anymore. So they stay on your credit report for 24 months, but after 12 months, the inquiry doesn't matter anymore, okay? So a lot of people don't know that. Inquiries only hurt the score for 12 months. After that, they're going to be on there for an additional 12 months just so that the lenders can see what competition they have and who you're pulling from. Also, they look to see you applied, but did you get approved? Because they'll notice, okay, she applied for this Bank of America loan. It shows an inquiry, but I don't see an account. So those are things that they look at. So it's like, well, if they didn't give you an account, then why should we, right? So that's very, very important to know, because before we can understand why our credit score is where it's at, we have to know the components and how to calculate and add it up based on this right here. These are all the calculations. I went over how many points per component so you all understand. I'm just gonna go back over that one more time just in case. So payment history is 35% of your credit score and equals to 192.5 credit score points, okay? So just paying your bills on time. Next is your amounts owed or debt ratio. That's 30% of your credit score. That right there is worth 165 credit score points. So 60% of your score is having open lines of credit and paying them on time, and using, not utilizing the full balance, right? The full limit, keeping the balance low. And then the third one is the average age of file. 15% is your credit age. That's 89.5 credit score points, guys. Just simply leave your accounts open. Don't let anyone get you upset where you don't pay your bills. Because I feel like some of the things that we deal with when it comes to our credit are on emotion, and we'll talk about that next. Next is the mix of your credit. It's 55 credit score points and 10% of your credit score. Just having different types of credit, like a student loan, a car, a personal loan, things like that. And then last but not least is inquiries, which is 10%, also 55 credit score points. So now you can start looking at your own credit report and seeing how were you losing some of those 55 credit score points, because you can only get 555 points. That is the difference between a 300 credit score and an 850 credit score. It's only 550 points. So in order to get all of your 550 points, you have to kind of follow this graph to say, okay, did I miss any payments? How am I using my credit cards? Did I age my credit? You know, are my accounts old, or are they fairly new, which is one big thing. Also, credit mix. If you don't have a mortgage, you will never get all of the points with the credit mix. So for you all who don't have a mortgage, you're losing some of those 55 credit score points by simply not having a mortgage report. And then with inquiries, am I applying too much? Should I stop? This right here alone, just knowing this little bit of things will help you be great when it comes to credit, okay? So we talked about 35%. We broke that down. We broke all of that down. So we talk about closing unused credit cards will improve. So that's what we're going to talk about next. So we're going to do a little FICO Score Fax. So a lot of people think that closing unused credit cards will improve their score. So the answer is false right there, false. That's not true. If you have an old account, we kind of touched on this on the last piece that I was just talking about. Don't close it, leave it, don't use it. I mean, it's not hurting you not using it. Just keep it, right? Keep it, don't use it, let it age. If you got a JCPenney card when you were 18 and you still have it, great, keep it. Don't allow yourself to mess anything up by closing that account, okay? Now, my FICO credit score should be the same at all bureaus. Okay, a lot of people think that. They're like, well, hey, Kiara, why is my score different between these three bureaus? And at the beginning, I stated that the three bureaus are three separate companies, and the information in between those three bureaus can be different. One company that one creditor could simply only want to pay that one creditor, that one bureau. So therefore, it wouldn't report on the other two. So that's why you have to make sure before you do business with certain companies to see where they report to. Are you going to report to all three bureaus? Because what good does an account do for you if it only reports on one bureau? Yeah, your TransUnion score is high, but what about Equifax and Experian, right? So that is false, okay? It should not be the same. Your score will not be the same because the information in the different bureaus will be different because there are 3 different companies. However, the accounts that are reporting should all report the same. For an example, if you have an account with Capital One and Capital One is reporting on all 3 bureaus, the information between those 3 bureaus should be the same. If the information is different, then that could be a violation. So we want to make sure that the information is correct across the board if it's reporting, okay? Another one, when I get married, my credit report is merged with my spouse's. A lot of people ask me about that when it comes to marriage and things like that. False. Everyone has their own credit report, okay? Now, the only time that it will start to kind of merge is if you all have accounts that are authorized user or joint accounts, like both of you all co-sign, on a card together, and one of you all did not make a payment, it will report on both reports. If you are authorized user on your spouse's credit card and that spouse is maxing that credit card out, that will report on your credit. That is the only time that will happen. But as far as merging with your spouse, you all, even though you all are married, you are still 2 separate people with 2 separate social security numbers and 2 separate credit reports. So that is false, guys. Okay. So another fact, checking my own credit score will create an inquiry at the credit bureaus and will lower my credit score. So when a creditor goes to pull your credit report, it is a hard inquiry. Absolutely, 100%. However, when you pull your credit report, it is not a hard inquiry. It is considered a soft inquiry. It's a soft pull. So therefore, it would not jeopardize anything as far as your credit score. So that is false, guys. Pull your credit as many times as you want. I honestly recommend that you should be having, monitor your credit monthly. So you should have alerts going up. If something changes, you should be the first one to know, because that will keep identity theft down for you. If you get alerts and you're getting a new report every month, you can pull your report monthly, take a look, make sure everything is correct, make sure only your name is on the credit report, your addresses, because what happens is when different addresses and things like that get on your credit report, that could be identity theft, okay? So it's important that you check your credit score monthly. And then my annual household income is part of the calculation of my FICO score. No, it does not matter how much money you make. It does not affect your credit score. So that's false, guys, okay? False. So you don't have to worry about your annual income. They say it's not based on your race or your job or anything like that, where you're located and things like that. So the Fair Credit Reporting Act states that every item reported on the credit report must be 100% accurate. It must be 100% verifiable. So that's why when you do have items on your credit report, whether you owe them or not, it is important that you ask them to verify the information. Also, just because you owe a company doesn't mean it's reporting 100% accurate. And it must report timely information. So it should stay updated. I look at credit report sometime and, Experian hasn't updated the credit card in 6 months, but the client has paid it off since then, right? But the other bureaus have updated it, or they still have the old credit limit or line, and that has now increased, and they're still reporting the old credit line, but the other bureaus have increased it. Things like that, right? The FCRA, which is short for the Fair Credit Reporting Act, protects you from that. So this is the law that helps you make sure that everything on your credit report is accurate, because 79% of all credit reports are negative. That's 80%, right? And almost every American has something wrong on the credit report, right? So we just want to make sure that we use that law to your advantage. So now I want to talk about questions. Did anyone have any questions?
Yes, there are questions in the chat box. Let's start from let's start from the bottom.
Okay.
How can I remove inquiries from my account if I apply for like a loan and get denied?
So when you get denied, that's the best time to dispute inquiries. You never want to dispute an inquiry that you actually got approved for. For an example, if you went to Capital One and you like, okay, let me get this card, and they approve you and you dispute the inquiry, you can risk getting that account closed. So please understand that if you have a lot of inquiries, but the accounts are open, please do not dispute those inquiries. However, if you were not approved, then you can dispute those inquiries, and you should dispute them. And you just ask the bureaus to verify that you actually did it, right? You never admit fault, right? Like, you're just like, hey, you know, I saw this on my credit report. I was wondering if you guys could, you know, verify, provide proof that I applied for these things with something with my signature on it. Send, you know, your name, your IDs, mail it off. In most cases, the bureau is just like, you know, and it's 50-50 chance with just that little dispute that it will come off. Sometimes it takes more aggressive practices, but sometimes you'll send in and they'll come right off. So yes, you can get those things off.
So someone asked, please discuss how to shop for a home mortgage or auto loan without hurting your credit score.
Ooh, I love that, right? That is a great question. Yes. So when it comes to getting anything, right, we have to, one, be prepared, because if your credit score is low, we shouldn't be shopping for a mortgage, because that's only going to cause the interest rates to be higher. So first step would be to know where you stand, right? So once you know where you stand, you can know what you qualify for. And I recommend using my FICO, because before you go and have them do a hard hit, remember I stated that you can pull your credit report yourself and it will not hurt. You can pull your FICO scores yourself for a car or for a mortgage, and it'll tell you exactly what your score is before you even walk or step foot to the dealership or the mortgage broker, the loan officer, right? So that would be two. So one, know where you stand. If you need to work on it a little more, I would say work on it a little more first. Then two, I would say always go through a credit union first. Go through your credit union first. You don't want to, I'd rather get my credit union with a lower interest rate than go to the dealership who may shop my loan. But if I have an account and a business relationship with this credit union, they're going to be more willing to give you a loan. You know, here's $20,000. Now you know what you qualify for, and you don't risk going to the dealership and they're running trying to see who will give you $20,000 when you only qualify for 15, right? So I would say go to a credit union to avoid, you know, the hustle and bustle of the car dealership blues. And then for mortgages, get pre-approved first. When you're going through, have someone look at your credit report first too. We do free credit consultations. Let us look at it. We'll say, yeah, you're ready. Go ahead, go talk to your lender. If you're ready, go. If you're not, work on those things first, because you can get approved with a 580, but why would you want to? Like, why would you want to pay the interest that you would have to pay? So again, it puts you in a financial bind because you're paying more than you have to. So it's all really starts with, because two, with buying a car and buying a house, you have to be financially savvy. And what I mean by that is your relationship with money. Buying a home, I mean, I bought mine. It was not like just a little walk in the park. They wanted a lot of my information. They wanted my bank statements. They wanted my check stubs. Like, they literally wanted everything. And they look at how much money you make, and they look at how you pay your bills and things like that. So first, let's assess what we were talking about earlier is our relationship with money. Because if our scores aren't the best, right? Because once you have good credit, you don't have to shop around. Like, you know what you want, you go in, you say what you want, right? I want this. And that's just what it is. They're like, do you want champagne? Can I get you some water, soda, a pizza, take you out to dinner? Because it's just a different conversation when your credit is where it's supposed to be. When you have a 7 and above, or even an 800, and you're trying to go buy a house, I mean, it's a no-brainer. It's going to be very quick. Just send your credentials or your credit score, pre-approval. You pick your house, you move in when you close in 30 days, right? But when you have to have these conversations, it's because your score isn't necessarily where it's supposed to be. So we got to, again, assess our relationship with money and figure out how we got there, what happened, right, to make us feel that insecurity of our credit, right? Because when your credit is not where you want it to be, it's like you get nervous, right? You get really, really nervous. Like, well, will I get approved? What do I need to do to get approved? You know, you got this. Let's just start with the personal credit, making sure that you get that in order, and you will never have to question yourself. You'll be confident knowing you will get approved no matter what you do and where you go. I hope that answered your question.
Yeah. So the next question is, what company should I monitor my credit with?
I love my FICO. It's on the more pricier side. I use Identity IQ. It's a really good service. It's $21. I get a discount on it. It's normally $30, but I get a $7 discount monthly. And I'll give you all the link where you can go. It's $1 to pull a copy of your credit report. My FICO doesn't give any type of deal like that, but it's great because their reports have a lot of information. So if your score is not where you want it to be, you want that report with as much information as possible so that you can start your dispute process. So I would say if your credit is where you want it to be, or you're about to apply for something, my FICO. And then if you're just kind of in a process where you're working on your credit, you should use Identity IQ.
How much is my FICO?
$40 a month.
40 a month. Okay. Great. The next question is, don't some credit card companies close accounts that aren't being used after a period of time?
Store cards can do that sometimes, yes. So it's good to use it at least once a year.
Okay.
Store,
I've seen that happen before.
Yeah, yes. It's mostly store cards, but credit cards, no, I haven't used my Capital One in about 3 years and it's still open.
Yeah, so Macy's, Dillard's, those department store type cards, they may close it. Okay.
Yeah, they will. Synchrony. If you have Synchrony accounts, they close them if you don't use them because they give it to other consumers who are going to use the limits. So.
Right. So what are some of the best credit cards to get when trying to rebuild your credit?
So secure cards, just like you stated before, how it helped you. I am an advocate for secure cards. It's like a lot of people don't like it. And I have to tell people, if you won't loan you money, why would a company loan you money?
Can you explain briefly what a secure card is and why it's used and how it can help?
So a secure card is you securing your loan, right? It's you securing it, okay? So with that, you have to secure the amount of the limit. So you deposit what you want your limits to be. So for an example, if you go to Navy Federal has a secure card, Discover has a secure card, Citi has a secure card, but just say we use Discover. I say, here's $500, Discover. I want a credit card. They're gonna mail me the credit card of the $500. Now, I'm gonna use it. I'm gonna be responsible with it. I'm gonna pay it back. And then after 8 to 9 months, they will send you your $500 back in a check and then give you a unsecured loan that you will be able to use. And it's a credit card and they normally double your limit. So secure cards are basically you securing your future with your money. And if you're not willing to give yourself money, then why would a company give you money? So secure cards are very important and essential to building your score. And it's a really quick way to get it up there.
I'm telling you guys, it works. Like Kiara said, you're lending yourself money. So this stuff definitely works.
Someone asked, can your personal credit affect your business credit?
They're two separate entities. They should be set up separately. However, it can affect you if you're trying to be a personal guarantor for your business and you can't because your personal credit is low. So like American Express, you can get American Express business account. It's the day you get your EIN number. However, they are going to want you to be a personal guarantor. So if your personal credit is bad, then you're not going to be able to get the account. So it could affect it, yeah. So you want to make sure you're working on both.
Okay. So we got a couple questions about trade lines, which I know is a hot topic. I saw the eyes roll back when I said trade lines. So in trade lines, what are your thoughts on someone buying trade lines to improve their credit score?
Buying or selling trade lines?
I am not a fan. I really am not. I feel that we are really so like consumed with the quick fix in life and everybody wants things instant gratification, quick. And
so what does buying the trade line do? Like how is that instant gratification? Explain to folks how that works.
Exactly. Okay. So buying a trade line would be, I come to one of you all and like, hey, you had the secure card for a long time. Let me put myself on that secure card, right? Or your credit card. And then your credit card will then report on my credit, and some of the history of the fact that you opened it 20 years ago will report on my credit. But the only bad thing about this that I've seen, nightmares literally, is that if hard times come and that person needs that money, then they use the credit card up and then that affects your credit. So then I'm like, okay, I'm looking at your credit report. I'm like, your score just went down 100 points. whose card is this? Oh, well, that's my mom's card. She put me on it. Well, your mom just maxed out her credit card. Like, you have to come off of that. So you can find yourself in a deeper hole because it's going to report whether they pay it or don't. So it's like you literally have your life in someone else's hands. Credit determines where you live, and if you work, where you work, your insurance rates, like everything in your entire life. And you're going to put that in the hands of someone else. For me,
That's a great explanation. We got another question on trade lines from Angie. She said, I didn't know paying for a trade line that is not a close relative is considered fraudulent, that it can hurt you in the future when the account is removed. What is your opinion on it?
So since a lot of people started doing the trade line thing, a lot of credit card companies now stop backdating accounts. So it's honestly, there's only like one or two that still does it. And then two, in the credit card agreement, they state that you can't do that. You can't sell your credit card data for someone to get on it and reap a benefit. So it is against the credit card terms and conditions. I wouldn't say it's illegal, but it's like blurred lines, with it. It's unethical is what I would say. Is what would be the best. It's not necessarily illegal, but doing it for a family member, cool, that's fine. But when it comes to random people, also sometimes those brokers, they're using dead people's information or stolen information. I've seen it all. So it's just like, if you don't know that person personally, the last thing you want is your name, and then you have to give them your social. We have to be careful who we're giving our information to. Then you get your credit score up and then you're hacked or identity theft. Like, I just don't trust it. I have ways that you can build your credit with primary trade lines in your own name. And one of them are secure cards. Another one is Credit Strong. You pay $15 a month. They report $1,000 trade lines on your credit report. There are ways around it. My jeweler's card gives you $5,000 store card instantly approved. $5,000 that you can have reported on your credit report. And it's just a one-time annual fee of $99 a year. And you can cancel that at any time and then use those accounts, build your credit for 6 months, and then go get an account with Discover. Now you avoided using anybody else. These are your own personal accounts. You manage them. Like, I can do bad by myself. I just don't want to include nobody.
Right.
No thanks.
More of the story is be careful with trade lines.
Right.
And hire someone reputable like Kiara who can advise you on legal and legit ways to improve your credit.
Yes.
Another question from Devin. He said, what is the best way to increase my credit line if I don't have a W-2 job anymore?
Increase your credit line. So honestly, your credit line can be increased by your banking relationship. Like, how are you using it? Are you paying it back on time? Are you paying it back every month? Speak with your bank and figure out what is the requirements for an increase. But as long as you are doing your part, I've always been able to get an increase. My husband, you sitting in the cut, scoot over so you can see.
Is that the better half there?
That's my better half.
How you doing,
Hey,
Hey guys.
This is Mr. Martin.
how you doing?
Doing excellent. How you guys doing?
Welcome to the party.
Yes, ma'am.
Homepreneurs.
Yes.
Absolutely, absolutely.
Correct. Somebody said, what do you mean by backdating?
What were we talking about backdating?
I think that was with the trade lines.
So backdating, so what that would mean, it would be to backdate the history. So example, I get on his credit card that he's had since 2010.
Uh-oh, watch out. Don't be messing up hubby's credit.
Since 2010, right? And it'll backdate on my credit report that I've had this account since 2010. So it'll give me history to 2010. So a lot of companies stopped doing that because they realized that people were selling trade lines. So that's what backdates. They backdate the history. So that was a great question.
All right, what other questions do we have? Someone else asked, do you do business credit in addition to personal credit?
So as far as business credit, I have a guide. It's not something that I do for anyone. I am really big on the do-it-yourself thing. I do provide a service. However, I don't provide that service. So I give you the tips and you build it.
Awesome. These are great questions. What other questions do y'all have,
I gotta
guys?
be Christina who's in here.
Christina's here? Where is she?
Spells. I gotta be her who's
I
in.
think she signed in as Crystal.
Because I was like, did I get hacked on my own webinar? Yep, that's her.
So I'm assuming you don't advise people sell trade lines either, because I can get them.
Mm.
Okay.
I don't. Again, I would rather teach you how to build your score, because this is my thing. I can give you the easy way out, or I can show you, and it will last a lifetime, right? Because if I show you and teach you something,
Right.
Oh, give a man a fish, right? Give him a fish, each for
show
a
'em
day.
how to fish it, right? Exactly.
Well, let me ask you a question. When searching for a credit repair company, what are some of the things that a person should be looking for? Any red flags? And I say that because, so like me, when I first started, I had went to rebuilding my credit. I went to, what's the name of that company? Lexington Law.
My baby's credit was challenged.
Right.
Holly Berry's credit, that's why she was trying to get with me, but we had to work on hers.
That was me. That was him.
You understand how I feel, right?
Listen, we both couldn't have bad credit. That's a recipe for disaster, okay? So I started to rebuild my credit. I went to Lexington Law. All of a sudden, it started taking like 6 months past. I'd seen nothing happening, contacted them. They're like, oh, well, you know, and I started to learn the process of what they were doing. Like, oh, well, you know, we've disputed this one charge. Once we hear back from them, we typically tackle these things one at a time. So that's when I realized what they were doing. Whereas they will mail off a letter for you for one charge, one dispute at a time, which is why it drags on month after month after month.
They were milking it.
And so
monthly fee.
I canceled it.
Mhm.
I have a credit company, that credit monitoring company. I called them. I said, hey, listen, how can I dispute some charges and stuff on my credit report? They gave me literally 3 numbers for each credit bureau. And it was a direct line to someone in the disputes department. I called every single number for all 3 bureaus. And it literally went to one of the dudes' name was like, yeah, this is Tyrone in disputes. So I'm expecting to get like a 1-800 number. I have to go through prompts. It literally picked up. I was able to literally do my own credit. And it took me about
A few months.
literally maybe about 2-3 months. And I started seeing stuff, getting alerts that stuff was being dropped off in weeks. He was like, listen, I'm sending out this email and I'm doing a phone call. So they weren't mailing anything when I contacted them. They were doing a phone call, and then they said they'll shoot an email. If they don't hear back, he said in 2 weeks, I'll take it off. I was seeing him take off stuff in 1 week. And that's what happened over the course of me contacting all 3 bureaus. So then I was like, well, damn, this is what all these credit bureaus are doing. All these credit repair companies, how can someone really be like, okay, listen, what's a good repair company for me to go with and trust that they're going to really dispute and take action aggressively on their credit report? Because I mean, for someone like me, I've been with my credit repair company we've been together 10 years, and I've been with them, my credit monitoring company. So I've had to been with them for maybe 15 years. So there are people out here who will legit stay with a company if they are doing what they say they're going to do. What's your take on that?
I love that. What happens is you have your Lexington Laws. They have different tiers. They do one at a time at a certain amount of money. They do a few more at a time for a certain amount. That goes all the way up to like $200 a month. So they dispute based on tiers, right?
Yeah, we are paying $197 a month.
Oh, well, that was normally one of their top tiers. So that's a lot, but no. So what we do, and 2, I want to talk on you calling the bureaus. Now, I'm not a fan of calling the bureaus. Let me tell you why. You looked up, and I've looked up, and if it's something I have to do, I will call. But when you have a client with 100 negative items on a credit report, calling the bureaus is out the window, right? Because when you do call and when you do disputes online, what you do is you opt out of arbitration laws that you can come back and sue. And you don't want that, right? So, and then 2, sometimes those items will come off, but they can pop back up when you do the phone or when you do online. So what we do differently is, and what you need to look for in a credit repair company is, 1, red flags are things like I can remove everything. That is not 100% true. Guarantees should never happen. So if you just, I'm riding around, I'm seeing like little bandit signs, like everything off 30 days guaranteed. I'm like, you know, how do you know what that person has on their credit report? So that's not true, right? It's not, that's not true. So you, if it's too good to be true, it is. You know, sometimes you have to be very careful who you give your credit, give your social security number to. And that is the biggest thing. I always tell my clients it takes time, and it could take 6 months. And I tell them that that's a full process, right? 6 to 9 months, depending on how many items you have on your credit. If I wow you in 3, great. But I know I set the expectation that
Right.
you're going to spend 6 to 9 months. Also, I coach my clients, because my biggest thing is that you got to get education. Like, don't just hire a company and they're just doing it for you. What are you learning so that you avoid getting back here? Because again, it had to be something with your situation that caused you to have a low credit score. You know, it could just be reckless spending, not paying attention to it, not feeling like it matters, whatever the case may be. It was something in the mindset or something that happened that caused your credit score to be low. So we just educate our clients on how to keep their credit score up and maintain it, things that they should be doing, accountability. You know, a lot of us just need to talk to somebody every month, just like a quick check-in monthly, like, hey, how you doing? I see you maxed out your credit card this month. What's going on? Are you going through a financial hardship? Yeah, okay. Well, we're gonna document this, but understand that you just set yourself back from your house because your score just went down 100 points. Now, what did you purchase? Some shoes. Was the shoes worth the backyard? Because they're not gonna be able to run in that backyard you want.
Right.
Not, because now you can push, push yourself further from your goal. So I'm kind of, I have like a no nonsense approach to, is either be great or be mediocre, and I'm not mediocre. So, you know, you want someone who's going to teach you. You want someone who's going to be honest. You don't want someone where it's a cell phone. You know, you want to call a company and actually speak to someone. That's important. You want to always make sure you sign some type of agreement with someone, because if something happens, you want to sue whoever's liable for it or go after somebody. You know, a lot of people want that quick fix. Oh, 1,500, cash out me, text me, this my number, you know, I'll get it right for you type of thing. And that's just not, that's a red flag. You know, you don't know who that person's around. Your personal information will be on their computer. You don't know, you know, it's questionable, right? If something was taken off my computer, then you have a company, right, that's backing you. So it's just very different. So just, if it seems too good to be true, guys, it's too good to be true.
Too good to be true.
All good things happen to those that wait. I don't recommend the quick fix. I don't preach the quick fix. It's going to take time. Not only do you got to change your mindset, you got to change your behaviors that got you there. And, you know, we got to build some credit and repair some credit. So it's a journey.
Love it. Love it. Like you said, if it sounds too good to be true, it is. No such thing as a get rich quick or a quick fix in real estate and business and credit repair and life.
Jason said, can you speak on the best way to remove charge-offs?
So that depends on what type of charge-off, right? So each charge-off has its own like better way to remove, right? So are you talking about like a charged off credit card, or would you more talk about a charged off like a repossession? Like which charge off? Because you can go so many different ways. Which one?
Hopefully he puts it in the chat.
Yeah, drop it in the credit cards. Okay, so are you willing to, now let's talk about a little accountability here. Are you willing to pay these credit cards? First question. Second question, when were they closed? Because based on the statute of limitations of your state, sometimes you don't have to pay items. Now, if it's out of the statute of limitations, it doesn't matter what they do, they can't come after you. For an example, in Texas, my clients have a 4-year statute of limitations. So anything that happened before 2016, they cannot get sued for. Okay. So therefore,
that statue's run out.
You're that statue, okay, right? And that's California too. You ain't paying nothing. You hear me? You don't have to. You listen. They can talk everything, okay? I'm not paying. They're about 4 years old. Okay, what state are you in though?
It depends what state you in. If you in
it depends on what state. If you're in Texas, cool. But like if you're in
Carolina.
It's 4 years too, I believe. Let me double check statute of limitation. I believe it's 4 years. It's pretty good in North Carolina.
Jason said he's in New Jersey.
Ooh. Let me pull my chart up.
Somebody else said they're in Maine.
I got you guys.
Mhm.
Maine, yeah. Look, they're in Maine. Look, every time I talk about this on a live video, everybody's like, I'm in this state. I'm in that state. Everybody wants to know. Okay, so 10 years? 6 years. It's 6 years.
In Jersey.
So you got 2 more years. So it's up to you at this point.
What about Maine?
So Maine. Look, the Maine. Come on.
And while you're pulling that up, what's been the biggest improvement of a client you've worked at? Like, what is the lowest credit score someone came in with, and then after you helped them, what have they gotten up to?
So we have went from literally 300s to 750s. Now, the reason I say 750s is because in order to get an 800 credit score, you have to have aged credit and you have to have a mortgage. And most of the people that come to me don't have a mortgage yet. They're trying to get a mortgage. So therefore, once they graduate on, they go on to get an 800 once they get the mortgage. And then once they are able to keep those accounts that we've built together, create some longevity. So there's no way that you can have an 800 credit score without a mortgage and without a account that's been open 9+ years.
Mm-hmm.
So someone had asked, how do they get in contact with you for your services?
And Maine is 6 years from the last date of collection activity, right? So that's the last time we paid, 6 years, okay, guys, for Maine. So now, as far as getting in touch with me, I recommend following me on my social media platform, which is Credit with Kiara. We're on Facebook. I have a group on Facebook, my page on Facebook, and my Instagram is Credit with Kiara. From there, you can click on Credit Resources, and you can schedule a free consultation. That would be the best way to get into it. Or you can purchase any DIY products on creditwithkiara.com if you are a do-it-yourselfer, which I think is great.
And what's some of the things you have on DIY under Credit with Kiara?
How to remove different things off your credit report, bankruptcies, letters for you to dispute with. So for that charge off you have, go to creditwithkiara.com and purchase my advanced dispute letter. It's $14, and it's a whole bundle of like 30 letters that you can use. Like if they don't remove the first time, you can send it the second. Like it's kind of, how you can remove items. But anything that you can think of, even Credit with Kiara t-shirts are on Credit with Kiara.
Brandon. So what about your actual services? Somebody said, what's your Instagram again?
Credit with Kiara.
Credit with Kiara. So for your actual services, would they go to your website, Bright Future Credit Solutions, or would you suggest they go elsewhere?
Okay. Bright Future Credit Solutions is the website. Bright Future Credit Solutions, you can go online there, and you can schedule a free consultation there as well.
Put in the chat. Another question for you. Do you have a success rate as far as getting items deleted? Do you quote any type of percentage, or is it kind of?
So I never give any guarantees. I give a money back guarantee. That's the only thing. So my percentage is no client comes to me that has ever not had things removed. So 90% of my clients see results in 30 to 45 days of items being removed. Okay. I'm very honest and upfront. Also, if you've already had disputes, which is something that we kind of investigate when you first start, it's going to be harder to get disputes. I'm sorry, not disputes, but harder to get deletions because you've already started the dispute process. And I'm not sure how you did it, what happened. So we have to instantly go more aggressive. But for a client who has never had any disputes and they come to us and we do our step-by-step aggressive rounds, they are 95% successful in our program and graduate within 6 months.
Okay.
Yes, we graduated 2,000 clients last year from Bright Future Credit Solutions.
Congrats.
And yes, we did really good. That was yes.
That is awesome. I love to hear that.
Guys,
Changing lives.
Literally.
I might have to give you a call because I think I may have a couple on there that I want some inquiries I need removed.
Okay, I got you for sure.
I may have to give you a ring.
I got you. Look, I just your
Any
credit
questions? We want to thank you so much, Kiara, for jumping on and spending an hour of your time with the community. And we really hope you and your husband get a ton of value out of the group.
Yeah.
And,
love it already.
thank you.
Awesome.
And for any of you guys, make sure you contact her, Everything Credit with Kiara, or go to her Bright Future Credit Solutions, which is also in the chat box, her website. But don't look into real estate and cars and all that other stuff until your credit is right. So let's not, fake it till we make it. Let's just make it.
I love that.
Love that.
So we ain't got to fake nothing in 2020. When I met my husband, when we sat down our first meeting / date, I asked him, "What's your credit score?" Like, I can find out what he wants to eat, what his favorite food and shit is later. I said,
Okay.
I knew my
What's your
FICO.
goals?
When you got good credit, you be like, I'm a 757. What's yours?
right. And my shit wasn't even good. And I said,
And you still asking.
I knew if we both had jacked up credit,
When you got
that
bad
shit
credit,
don't mix.
you stuttering when they ask you. Like,
Right.
you know what? I forgot what my.
It ain't that bad. I think, I think I got like a few items on there. It's like, it's bad. Like, just admit it's bad. It's a 500. It's not
Right.
that.
That's the only way you're going to level up. I let him know off rip what my credit score was. I told him, I said, I'm literally right now when we met, I said, I'm in the process of fixing my credit.
Yeah, we're working on
I said, I paid off everything that should have been paid off because I was in college, living my best life. Then I said, but going forward, this is what's happening. I said, I've gotten everything off. Now I'm just trying to rebuild my score back up. But I need to know where his was because I can't help somebody else and I'm already at the bottom.
Exactly.
It was like my shit's at 800 and something. I said, okay,
All right.
Exactly.
you might be a winner.
You might be helping
You might be
material.
You might be a winner. But thank you guys so much for jumping on with us here. I really, really appreciate your time. And we appreciate all you guys for jumping on.
And we'll see you guys in Atlanta. I know.
We
if
will.
I'm-
We
We
live.
can't wait.
We'll be there. We live 2020. Let's
So
go.
if any of you guys are at We Live, make sure you run us down because we would love to meet you guys. And who knows, maybe we'll all get up and do something at one of these nights together or what have you. So thank you guys so much for joining us. We'll talk to you guys later.
Good night, everyone.
Good night, guys.
Be great, guys.
Thank you.